We're taking a look at a live shot of the latest SpaceX launch. It's Falcon 9 rocket carrying a communications satellite for the South Korean military. Takeoff is about to happen, and we'll keep you updated on anything that happens there. Welcome back to Fast. Another step forward in the race for coronavirus vaccine as an early trial shows positive results. Our Meg Terrell joins us with the details. Hey, Meg.
Hey, Melissa, these were highly anticipated results from Oxford University and AstraZeneca's vaccine. A phase 1-2 study of more than 1,000 participants was run in the UK. It showed that the vaccine elicited immune responses both in terms of neutralizing antibodies and T cells, did show some side effects like injection site pain, headache, and fatigue. However, even though this was run in more than 1,000 participants, experts are pointing out that we really only saw data on a few dozen participants in terms of the neutralizing antibody data. 35 participants are all that they had run those tests on, and 10 participants who had received 2 doses, which it will look like they will need to go into these later stage studies to get that immune response. Now, Wall Street is starting to weigh in on these results and trying to compare them to what we've seen from Pfizer and Moderna. Even though they're not apples to apples, we have to caveat that. Bernstein's Ronnie Gal saying in a note that the AstraZeneca data are positive, but appear not to match Pfizer and Moderna's bar, whereas Cowen's Jeroen Werber says that Pfizer and BioNTech have taken the lead among vaccine candidates. Now, we're going to have to see how all of this bears out, of course, in those large phase 3 trials, which are now due to begin next week for the earliest ones. Moderna set to begin on Monday next week if all keeps to plan. So we could be seeing by September or October, depending on how enrollment and those trials go, whether these vaccines work and the earliest signs of broader safety. Melissa?
Meg, when you say it's not apples to apples, is it because the mechanism, the platforms are different? Is it because the trial sizes are vastly different? I mean, what's the primary differentiating factor?
It's actually just the way that they compared the neutralizing antibody data. So they might have used different assays or different tests. And of course, they had different patients that they were comparing against in terms of people who've recovered from the disease. That's the comparator in these trials. You look at the neutralizing antibodies generated by the vaccine versus those generated by actual exposure to COVID-19 or to the virus SARS-CoV-2. And so that was different across the studies.
All right. Interesting that the analysts are apt to make the comparison. Meg, thank you. Meg Terrell. Vaccine or not, our next guest sees the market flirting with fresh highs. Market researcher Jim Bianco is president of Bianco Research. I thought the vaccine was the holy grail to all of this, Jim.
I think the holy grail is stimulus, either government stimulus or Federal Reserve stimulus. That is what's been pushing this market higher. As far as the vaccine goes, yeah, make no mistake that would be great if we get a vaccine, but I don't think that's what's been driving this market the last few months, especially since the early June highs.
You know, when you say the holy grail is stimulus is not just, I mean, $3.5 trillion versus $1 trillion, which is the divide between Republicans and Democrats right now, is a huge divide. So when you say the holy grail is stimulus, how much stimulus do we need?
Well, let's keep in mind how stimulus is going to work. And we've seen this with the government shutdowns, and we've seen this with the debt ceiling fights. If the $600 a week federal unemployment insurance ends July 31st, somewhere around August 1st at 1 a.m., the conversation begins, and somewhere around 4 or 5 a.m., we're going to have a deal. That's at least the way it's gone in the past. So those gaps will be bridged probably not until past the 12th hour, as we've seen, you run into the first or something like that. And that's why I think the market is going to stay very calm about all of this discussion. $2 trillion would be the ideal number. I believe, anything more than that would be better. And we'll have to see how it works out. What would be bad, which I don't expect, is if we walked away with nothing. But I would really be surprised, and I think a lot of market participants would be surprised by that.
Hey, Jim, it's Tim Seymour. The other side of your story, and I'm agreeing with you that you don't fight the Fed, you don't fight the liquidity, and it sounds like you threw in the towel at some point. What's the Fed doing, though? It does appear that they're using less balance sheet over the last few weeks. Do you think this is just a very mild tapering of nothing? But to be clear, the correlations we had for stocks were absolutely 1-to-1 or some multiple of that to the Fed balance sheet growing. The Fed balance sheet is shrunk small. Are they changing tact at all?
No, the simple answer with the balance sheet is a lot of the dollar swaps and a lot of the non-securities purchases are what's rolling off. If you were to break down the balance sheet and look at how many corporate bonds they're buying, how many ETFs they're buying, how many treasuries and mortgages they're buying, they're still plowing ahead with all of that. It's been some of that other non-security purchase stuff that has been coming down. And as far as it goes with, don't fight the Fed, in the second quarter, about 70 or 80%, depending on how you measure it, of all the ETF flows went into stuff that the Fed is buying. Corporate bond ETFs, high yield ETFs, aggregate bond ETFs, not equities. That's one of the rare times that you've seen with ETF flows that the vast amount of money has been flowing into a fixed income asset. And not only that, the fixed income asset that the Federal Reserve is buying. So this whole idea of co-investing with the Fed has been huge. And I don't think it's stopped just because the balance sheet has peaked off of some non-securities swaps that have been rolling off the last couple of weeks.
Jim, always great to speak with you. Thank you.
Thank you.
Jim Bianco, Bianco Research. Karen, that figure is staggering. 70 to 80% of all ETF flows into what the Fed has been buying. Are you in with it? Are you with the Fed?
Well, I'm with the Fed to the extent that I own banks, right? Because they've definitely been a beneficiary of the Fed buying and healing the corporate credit market. And so to the extent that they're there, but I'm actually short some HYG against that.
BK, where would you be?
You know what's interesting about what Jim was talking about is that, a vaccine actually might be bearish for the stock market. Because if you think about it, if we have a vaccine, we no longer need all the stimulus, and you have to start pricing in the Fed raising rates. So that, to me, is kind of on the horizon of what you need to be worried about. In the meantime, though, listen, you want to be as close to the spigot as possible when they're printing as much money. You want to be the first person at the printer. So why not buy into the corporate debt land?
Well, that's the view if you think that it's a binary trade if you have a vaccine, right? I mean, that's assuming that everybody gets a vaccine, that the vaccine is effective and doesn't have bad side effects, and that people actually go back to their old behavior. And I don't know if that is a foregone conclusion, Dan.
Yeah, listen, these trials are a joke, okay? No one's taking this vaccine anytime in 2020, okay? So if you want to trade off the announcement of it, have at it. But I'll tell you one thing, it sure felt like the Fed was buying large cap stocks today, and some of you Fast Money viewers may get your wish if that was the case, because what did I say a couple months ago, Mel? If they do that, I'm out.